SpaceX IPO is getting treated like more than a single headline. The timeline accelerated from a vague 2026 goal to a confidential filing window in March. Reports from late February suggest the company could submit documents within weeks. That is why the first step is separating the confirmed facts from the market fear building around them. Investors are pricing in a controversial event that might not be public until June. Here is what is actually confirmed. Start with the confirmed facts around SpaceX IPO valuation. Bloomberg notes a potential value above $1.75 trillion as of late February. Earlier reports in December framed the move as one of the largest public offerings ever attempted. That matters because rumors and real disruptions can look similar in a headline, but they do not carry the same economic weight. The Financial Times later specified a mid-June target for the actual listing. The next question is why markets moved so fast. Traders ask why markets reacted so quickly to SpaceX IPO. Prices move first when traders think a choke point, supply route, policy decision, or business shift could change the next few weeks of risk. The current record was held by Saudi Arabia's Aramco, who raised around $29 billion. That early reaction does not confirm the worst case, but it does show where investors think the pressure points are. SpaceX aims to raise at least double that amount. From there, the story moves into the broader economy. Capital flows tell the transmission story. A shock is not only about the first market move, but how it reaches freight, fuel, inflation, financing costs, and consumer confidence. Recent reporting suggests that they are on target for a June IPO, which would be the largest by both valuation and by amount of capital raised. Once those channels stay stressed together, the story stops looking temporary and starts looking macroeconomic. This requires a huge range of institutional and retail mix to get this sort of an IPO done. The early damage is not spread evenly. After that, it becomes a question of exposure. Some regions, industries, or business models feel the pressure first because they depend more heavily on the affected route, commodity, or policy. Reuters noted that SpaceX had lined up major Wall Street banks for leading roles, which makes the IPO chatter feel more concrete. That is where a broad headline turns into winners, losers, and sector-specific damage. These banks now carry the risk of distributing $50 billion in new equity. The bigger risk depends on what happens next. The recession or crisis case usually depends on one more condition: persistence. A short burst of volatility can fade, but a disruption that drags on starts changing business behavior, central bank expectations, and investment plans. AP reported that SpaceX combined with xAI before what it described as an expected IPO later in 2026. That is the difference between a dramatic headline and a lasting economic drag. The merger changes what public investors may actually be buying if the listing goes ahead. The key thing to remember is that strong reporting and even confidential filing preparation still do not guarantee a finished public deal on the original schedule. Valuation can move, structure can change, and the xAI connection means investors may be evaluating something more complicated than a plain SpaceX listing. So the best way to read the story is to separate credible preparation from confirmed execution. The bottom line is that the SpaceX IPO story looks real enough to take seriously, but not finished enough to call settled. The reporting points to 2026 preparation, huge valuation expectations, and a market appetite that could make this one of the biggest offerings ever attempted. But until the timing, structure, and final company package are clearer, the smartest read is still cautious curiosity instead of certainty.